Hello, Wycoffians. Welcome to Power Charting. Trends are fun. Trends are profitable. Bull trends, bear trends. Let's have a look at trends today. Let's see if we can discover what is working in both directions. And let's look at the stock market through our stock market studies. My Wycoffian friends, thank you for being here. And friends of Wycoffians, thank you for being here. I'm Bruce Fraser, your host. Let's get started. Big announcement, September 18th, the Technical Securities Analysts Association of San Francisco is having their annual virtual fall conference. Second year we've done it as a virtual conference. We have an amazing lineup of speakers, including our very own Chris Kimball. He is wonderful on Your Daily 5, an incredible chartist. Ari Wald, Wall Street technical analyst, exceptional. Craig Johnson does amazing institutional technical work and wants to share that with us. He's one of our all-time favorites. Brett Steenbarger is going to talk about peak performance trading. You've got to be there for that. Arusha Perez, dear friend, is going to talk about his experience as a trader. He is a portfolio manager for O'Neill and Company. And then Alessio, our friend Alessio Rutiliano, is going to talk about technical analysis, point and figure as related to the crypto market. Sign up today. It's going to be a great time. If you cannot attend the whole conference live as a member of the TSAA, you can watch the videos at any time. The videos will be available shortly after the conference. And so attend for what you can, watch the rest later. You may want to watch it over and over. It's very inexpensive to become a member of this great not-for-profit organization. You will love being a member. The board has got a number of great themes and ideas that they're going to be doing for the membership month in and month out. From here on out, it's going to be fantastic. Okay, so distribution studies, we talked about those a few weeks ago. We're going to dig in and see whether or not distribution is the theme here. Actually, I think it's a two-way market. There are good things going on from the bull side and the bear side. So let's dig into that. This is a really interesting chart. This is a 3% box size point and figure chart, 1-point reversal methodology. This is counting logarithmic scaling on point and figure. Very unusual, very different. You can see here that there's been a phenomenal run up from the COVID lows of last year. That count, if we take it back to the late 2018 lows, count that across, we are right into the zone of fulfilling that count objective. Also notice the acceleration of the trend here into the count objective range. So this may very well mean that we need to pause for some period of time. It could be that it's not done going up simply because it's in a climactic surge. But keep in mind, each one of these boxes on the way up is a 3% increase from the prior box. So that's a phenomenal acceleration of prices on a log scale. And so we will watch this most closely. And then finally, I want to show you this chart because here in the very short term, this is only 10-minute point and figure. So it's a very small structure. And we're going to look at more S&P charts of the structure, but there is a distribution count here. And there's been a breakdown out of this zone and a rally up into former support, now potentially resistance. It actually rallied a little bit further. I have more current charts on that. Okay, and with that, let's get started and look at some of these other charts. This is our first chart in our deck for today, NASDAQ Comp. And this is a 4-hour chart of the NASDAQ comp that goes really back to the beginning of the year. And then you can see also an advanced decline oscillator of all the NASDAQ composite stocks. This is an unweighted indicator of breadth. And so it's an overbought, oversold type indicator. We do 5-period smoothing on it. The thing that I would like to point out here is that you can have a overbought condition, and when it starts to turn down, shortly thereafter, you can get weakness in the index itself. Well, something interesting has happened here most recently. You can see here, big decline from the late April low down to the May low. And this was also a decline in the NASDAQ composite individual issues into an oversold condition. We have something like that going on here, but the NASDAQ comp isn't dropping with the weakness that's in the advanced decline oscillator. Well, that means that there is weakness in the underlying issues because each one of these issues is counted and represented in this indicator. But the mega cap, monster cap, top 10 stocks in the NASDAQ cap weighted index are holding up this market and helping it to rally. You'll notice right up here in this zone, there appears to be something that looks like distribution forming on a very, very small time frame basis as this indicator goes down. So let's look at this and let's drill in. Here is the ARK. Now, this is the NASDAQ percent of stocks above their 200-day moving average. And this indicator is very interesting because, again, it's a breadth indicator, and it's the percent of stocks above their 200-day moving average. And this indicator is in a clear downtrend since February. That means fewer and fewer stocks are in uptrends as defined by being above their long-term moving average. It's a very straightforward, very simple way to keep track of uptrends and downtrends in the markets. Very effective. I've been doing it for 30 plus years, keeping an eye on this indicator. Now, this ARK fund is a fund that is an actively managed ETF of stocks that are mostly in the NASDAQ composite. And you can see here that there's a definite correlation between the trend of the ARK fund and the trend of the typical stock in the NASDAQ composite. Now, what that means is that the typical NASDAQ portfolio, which is not cap weighted to the top 10 names, but only has representation in them, is having a much poorer performance since the beginning of the year than is the, say, the NASDAQ 100 or the NASDAQ comp index. So this is what the typical portfolio looks like. And I would say that the ARK people are really good portfolio managers, and nonetheless, they are being weighed down by the internal trend of the individual stocks in this index. Now, here we go. Let's get into the NASDAQ comp itself. This is a distribution structure of sorts, a 10-minute basis. So this point figure goes back to the beginning. This structure goes back to late August. And this has the look of preliminary supply, automatic reaction, climax, buying climax, another automatic reaction, range bound condition, and then a sign of weakness and a rally into a last point of supply. And this now looks like a distribution type structure. So here, if we keep, now this, my calculation is slightly different from what we have here, but it's about 20 columns, and it counts down to 15,083. So let's see, here's 15,086 to 15,038. So this is 15,031. So this new chart I just drew is slightly different ATR scaling because of the calculation method, but you can see that there is the potential here to go down into this zone, which is really just call it a tempest in a teapot, in that it is a distribution structure that may result in a minor decline, but not necessarily a significant drop. Now, looking at the Dow Jones Industrial Average, here is an interesting upward stride going all the way back to 2011 on the monthly chart. The Dow has been riding along the upper reaches of this trend channel, staying above it throughout most of 2021. And so it's just sort of hovering along here above this trend line. And this trend line, we want to make sure that the Dow can, in fact, stay on or above the upper end of this channel. If it comes back in, it may be like what we saw in, say, late 2018, where there was a really sharp break back through the channel. As you saw, it rode along here for almost a year and then broke into the channel, tested it again, and then the COVID decline. Okay, so let's keep going. We don't want to run out of time. So here is the NASDAQ comp again. Here's that distribution 2-hour chart. This is the advanced decline oscillator on a 2-hour basis, and you can see the deterioration of this indicator. These are upside non-confirmations of higher prices in the comp, which you often get. Here is an upside non-confirmation here, which led to this pullback in mid-August. We have something that looks somewhat like that and roughly at the same level that has occurred and broke the NASDAQ composite down into a sign of weakness. Now there's an attempt to rally, but that rally could result in another attempt to go back down to oversold. We would look for divergence, meaning a higher low in a decline in the index to suggest that we have an oversold condition. Now, looking at the Dow Industrial Average, this is a very interesting chart. I published this chart, gosh, in mid-August, and at that time it was roughly in this area right here. And I called this the danger zone because it was above resistance as defined by the buying climax. It was above resistance, but it needed to, at the time, we had decided that it needed to rally away into a new uptrend. We don't want to see these indexes lingering around their breakout levels. We want them to break out and get going because that indicates that absorption of the reaccumulation is complete, stock is scarce, difficult for institutions to buy, moves the price up easily. That is not the case here so far. As a matter of fact, we can see in the Dow Industrials that it's actually broken the bottom of this channel that goes back to November of 2020. And so now we're below this trend line here as defined by these 3 points. And these touches along here have all worked to hold up the Dow, but now it's below it. Today was an interesting day. I'll have further comments on that as we go. And the day is not over yet. Here is the bullish percent. This is a measure of the stocks inside of an index, in this case, the Dow Industrials, that are on breakout buy signals on their point and figure charts. And so we look for the line to be rising to say that there's an increased number of bullish breakouts and bullish uptrends in the index itself. This is the case here, as it rallied from around 40% up to 90%. This is the case here. Each of these coincides with good rallies. And here you can see this rally from around 55 up to over 80 towards 85 produced a pretty good rally and a throw over of this trend channel. Now look what's happening. A breakout here of this area, which we are concerned might have distributional qualities because it's not just pulling away, also shows that the internals of the Dow Industrials is not having a number of expanding bullish breakouts and bullish uptrends in the bullish percent index. And so this, we would say at this point, because it's still above 50%, it's at 62% right now, or 60% right now, is that it still has the potential to start to trend up. And that would be what we would want to see, is an upward trend here in both the bullish percent and in the index itself. Okay, turning to the Russell 2000, here is a very large trading range structure that goes all the way back to February. And that has a look at this climactic acceleration, automatic reaction. We have a range bound condition with resistance drawn across here, support along here, and we're trying to work our way back up towards the resistance area, which it's gotten to, and for it to then break out. So far, the pullback is quite shallow. The Chaikin money flow has been continually getting stronger here, which is what we would want to see at the conclusion of reaccumulation. Now, the negative we have is the relative strength. The relative strength is in a downtrend on a daily basis. We want to see a breakout here of this downtrending moving average, in which accompanies the breakout in the Russell 2000 ETF as it jumps up and out of this sideways trading area. We will watch closely for that. Until that happens, we want to respect the deteriorating relative strength in the Russell 2000 at this time. Okay, and now we turn to the New York Stock Exchange, and I'm going to pause for just a sec. Now, here we can see in the this is all New York listed stocks in the bullish percent of the New York Stock Exchange. So it's a very large list of stocks, unlike the Dow 30. It's a much bigger list, but I want to point out along here that you can see that there is deteriorating series of lower highs on the way up in this index, not uncommon in a bull run. There comes a point in bull markets where there starts to be a narrowing of the focus of the individual stocks and the industry groups that are outperforming in the market. We see something like that occurring here. Notice the final jump up and out in this index has been accompanied by a rally of relatively low quality. Now it's still above 60 or 59%. It's still above 50%, which is a plurality of stocks that are on bullish buy signals on the bullish percent index. That's good. What we want to be really sensitive to is look here. You can see the deterioration along here. This is going into the October peak in 2018 in the New York Composite Index, which ultimately led to a very quick, sharp decline in that index, which was also accompanied by this decline here. So we want to be aware of the deterioration. This is approximately the same area that it was at when it broke down. So we just want to be good risk managers because of the potential for some kind of a break and the fact that there are fewer and fewer stocks that are participating as we go here. Now let's zoom back into the S&P 500. This is a 15-minute chart. Again, I think it's a great case study. This is my personal working chart, which I'd love to share with you. And I want to just show you here the, you can see buying climax, beautiful acceleration, automatic reaction, sharp reaction. We draw support here, we draw resistance up here. These have worked out quite nicely. Look what happened here. Well, I'll get to today in a minute, but here's an up thrust in phase B, which means that you have a lot of volatility on the way up. It up thrusts, it tests, it comes right back into the structure again, and then it attempts to rally. Look at the rally. The rally is not as good as the prior rallies in this structure, and then it jumps above the buying climax, which is resistance. And so that resistance does in fact come into play right away. Selling comes right in at the resistance line. It comes right back down and goes into a sign of weakness below support, rallies again, but notice the rally can only get about to the midpoint of the trading range and then breaks again. Volatility is increasing, and we know that volatility expands as we get further into distribution. And so this is very interesting. Now look at this rally. This is a bit of a short covering type rally. Today, early on, the market just took off, rallied up and went right into this zone right here. I'm making a big mess on this chart. But anyway, you can see it rallied beautifully up into this area, but look what happens. It immediately gives back within the same day. It gives back the gains that it made early in the day, and then look at this consolidation. It's weaker with lower highs and lower lows throughout, and then another sharp decline down to the area of another sign of weakness low. So this really does look like it has the elements of distribution. Now, again, this is just 15 minutes. So this is a very small time period, but we want to keep an eye on these. And for many of you who are shorter term traders, this is very useful information for you to work with. Okay, so now here is a point and figure chart that I like to use, which is one box scaling, S&P 3-box reversal, and this I counted across 51 columns here. One box reversal counts down to 4392, which is not even on here. So you can't, it's below this area. And then counting from here over to here, this area counts 71 columns. So that's 3-box reversal. So times 3, that's 213 S&P points. So for those of you that like to trade the S&P, there's 213 points in the structure to work with. And then look at this beautiful, just sharp rally and reaction today, which has worked its way back down. So very interesting place in this chart. And so you can't even see this, but the target 4392 on the smaller count, 4332 on the larger count. And again, this is an interesting place. I'll show you in a minute why. Here is the bullish percent on the S&P 500 stocks. And note that, and I'm going to go really fast, is that there is a rally upward and then a lower high here to here and well below the prior peak, but still above 50%. So that is supportive of a bull market. And then and you can see here, this is where the 2018 decline started from, which is almost exactly where this is right now. And so this is continuing to make higher highs. The bullish percent index is not. So we want to be very sensitive to that. Our point figure count carries down to this area right here, just below this trend channel. And so it very well could be that we get a decline to somewhere in the range of this trend channel low, what we call the demand line here. And in that area, we could maybe break through it and then come right back in. That would be a very bullish outcome in my mind. And then let's move on to some other great charts that I've got for you. So I'm going to pause.
What if you could look beyond price and identify big moves in the market before they happen? That's why we created the Moxie Indicator Minutes. Hosted by me, T.G. Watkins of Simpler Trading, the creator of the Moxie Indicator. Each week, I'll provide you details about the indicator, what it does, and how it can work for you. Only on StockCharts TV.
Now, just a note, I'm going to stop right at 29 minutes and pause for the YouTube recording and for the presentation on StockCharts TV. The YouTube recording, I'm going to have a continuation of discussion for a couple more minutes. I have some great charts to show you of industry groups and stocks I think are both bull trends and bear trends, and I want to go through a few of those with you very quickly. So I apologize I didn't get all this into 30 minutes, but we can still look. Now here is heavy construction, beautiful base back in 2020, and then a really nice jump up and out. Look at the resistance along here. This is really interesting. Starting here, you can see there is beautiful resistance up and out. It got very far away from this big accumulation type structure here, and upwards it goes. And so now it's trying to break out again. And of course, look at the relative strength. Relative strength has returned back to its rising moving average. This is leadership. This is a leadership theme. And we want to participate in these beautiful leadership uptrends. These are the trends that make us happy, and we want to identify them and trade them. Home improvement, this is interesting because it's kind of right on the cusp. It wants to break out here. If it does that, there's sort of an accumulation here. Breaks out, look at this, pause, jump, pause. Want to see another jump and get this relative strength up. And then this group will come right back into, I think, a great look. Here's medical equipment, like medical equipment. Look at that uptrend. It's just really leading the market higher. I think it's a fantastic theme. Big, long uptrend going back to 2017. It's back into a relative strength uptrend with price. And let's turn to a couple of stocks in this group. Medtronic, beautiful pause since May. Now a nice jump up and out with a sharp bullish bar. Consolidation, doesn't seem to want to come back into the structure on a daily basis. The relative strength appears to have made a base. I've got some very cool new research I'm going to show you on relative strength in the next week or two. So stay tuned. I'm also going to write a blog on it. Now here's Stryker, same group, reaccumulation type structure, had a really sharp reaction back into the pattern, came up and out. Now we want to see it have a very shallow flat reaction or just continue its uptrend. Look at this big beautiful base and the relative strength. Relative strength is up above its moving average. That's very constructive. Okay, and with that, I'm going to pause and watch the rest of this on YouTube. Welcome back to Power Charting. This is the bonus content that is available on YouTube. Thanks for coming and watching the rest of this. Insurance brokers, the insurance segment of the finance sector has been really, really good lately. And notice the base that has formed in the relative strength here. And this is a really good looking structure right along here. And this looks like a base. Sometimes you can see a base in the relative strength while there's just this ongoing uptrend. We want to participate in stocks that are confirmed up on a relative strength and a price basis. Look at this kind of pivotal flat correction, jumps up and out of there, and it's just marching higher. This is a leadership theme, and it looks terrific, and we will keep an eye on that. I'm not going to be able to show you the individual stocks necessarily in all the groups that we're going to look at today. Maybe we'll devote a whole program just looking at the groups and stocks. Here's life insurance, and life insurance is again in a beautiful uptrend. Just look at this, just broke out of a sort of a resistance area that looks a little bit like reaccumulation without the COVID decline, but now it's up and out after a really good rally, and the pause came right back in to test the top of that, come back to the long-term uptrending moving average, a great place to initiate or add to positions, and now it's working its way back up to resistance. Big base in the relative strength. Hartford Financial Services is a stock in this sector, in this industry group, and you can see here an accumulation type structure with a climax right here, and then a beautiful base. It's above a rising moving average and about to break out above the resistance area that was defined in March. US residential REITs, this looks really good. Look at the relative strength here. So note the base here in residential REITs. You can see it in the relative strength. Big, incredible uptrend after building an accumulation structure in 2020 into early 2021. Wouldn't surprise me if it doesn't need to pause here. Maybe it pulls back to the uptrending moving average. That's really very constructive. Electronic equipment. I'll let you drill into these and look at individual stocks. And so here you can see a pullback to a rising moving average, and the price trend just keeps working higher and higher. Look at this big cause. It's been built all the way back to the beginning of 2018. Food retailers and wholesalers. Beautiful base type structure above, pulling up the moving average. It's just broken out and started to march higher. I would be looking for pullbacks in the uptrend as an opportunity to be able to get on board the themes here. Drill in, you might be able to, this is a really good point actually, you might be able to find individual positions inside of the group that are, really poised for a turn back into their uptrends. Each group has stocks that are at different places in their rising trends. Full line insurance, I'll right up against resistance up here. And then I want to get into aluminum. The aluminum index is interesting. It's just completed a small accumulation type structure. Look at the relative strength here. Just persistently higher and higher. Now, look, it's getting into the range of the 2018 highs here, where it's getting ready to break out, and that would be potentially a very dynamic situation for the aluminum stocks. I'm going to show you a couple of aluminum stocks here that you can maybe check out and look for more. Look for other ones, but this is a really compelling theme. First one is Alcoa. So note in Alcoa, reaccumulation structure. This is a daily chart. Relative strength made a beautiful base along here in the relative strength along with the reaccumulation in price. They are both now exerting themselves into a new uptrend. That looks really compelling as the beginning of a new trend. This would be worth taking a point and figure chart count on. Norsk Hydro, another one, beautiful uptrend in the relative strength. It's just pulled back to its rising moving average on relative strength. It's pulled back towards its moving average here. Can't even get back to the moving average. These groups are acting very, very strong, very compelling theme here. And now this is weekly, so this is important. So the weekly is acting really, really well. And then you get into the daily. Look at this reaccumulation structure in the daily. And so it had a really sharp pullback after an upthrusting action, another higher low. Look at this. Each low in this reaccumulation is higher than the preceding. That is a really good sign for a strong reaccumulation. Now it is up and out. It's just resolved that reaccumulation area, and the relative strength is confirming it. So auto parts is very interesting for a different reason. We've been looking at uptrends here, and there's a number of really good looking uptrends, but also there's trends in the opposite direction. So here is a distribution type trend in auto parts. Note the distribution trend in auto parts in 2017 and 2018 and how it resolved into a pretty stiff decline, then a redistribution and another big decline. Well, here, now you're just on the edge of support and starting to break down into a sign of weakness. This may produce a rally, but look at the relative strength. The relative strength is now below its moving average. It's turned down. It's in a downtrend. This is a group that is going to be suspect to the institutional money managers as they look at how it's performing relative to other groups, say like aluminum. Here is a stock in that sector, and you can see here that it has an upthrust type action here, a test of the upthrust, and then a failure back into the structure here, resistance, support, and it's pulled back to the long-term rising moving average. It may rally off of that. We'll watch to see if it puts in a last point of supply. This is a very interesting structure, and we'll want to see whether or not it can continue to show weakness. Borg Warner, very important, original equipment parts supplier, distribution type structure, climactic surge, resistance, upthrusting that and failing almost right away back into the structure. Support, look where the support is right here. I should try to draw this. And so you can see here, right along here, it's right on that support area. Now, and look, there's no lift in this rally at all. It can't even get back to the moving average, which is flattened out. So we'll watch to see whether or not a rally can emerge in Borg Warner, or whether or not it shows additional signs of weakness below this very important automatic reaction point. So this is a very interesting place. And moving on. There we go. Okay. Automobiles. Automobiles is a very interesting area of the market. It's been very strong in 2020. You can see that it has elements on the weekly of sideways trading, and then a potential flirting with breaking down out of the moving average. Well, look, the relative strength is already below its moving average, and it's turning down the moving average, which is a warning of sorts. So here is Ferrari, RACE, great symbol, love it. This was a stock that was very important because look at the resistance that formed here. And let's see if we can draw this. resistance. It rallied today, put in a black candle, is back down to, it rallied and failed back to the area of resistance, which shows this is formidable and important resistance. Here's an upthrusting action and a failure back in. Each one of these lows is to a higher low. So we expect to see Ferrari be able to continue its rally upward. Relative strength is trying to get back above the moving average. Very interesting place for this stock. So I have a weekly chart also of Ferrari, and let's go to that here. This is the weekly. Look at the relative strength. On the weekly basis, relative strength is breaking down. This will start, and it's been going on through all of 2021. This could become a stock that is under suspicion by the institutions, and they could start to supply the market with stock, which could further weigh it down. And so we will watch this closely. In the case of General Motors, we can see here really evidence of distribution after the June high. It really shows up. This is an upthrusting action. Potentially, I would say this is an upthrust after distribution, because look at the throw over here, a test, and then a consistent downtrend right into support. That's what upthrusts after distribution act like. And so here, to see that, and then look at the break of support. Let's draw that support. Look at that. Here we are right on it, no lift. There should be support that can rally this market up to the moving average and possibly even higher. That could still happen, but this is a very interesting place in this stock. And then also we can draw resistance right here. And you can see the inability to be able to consistently sustain above the resistance area where this buying climax is. So always put in those buying climax, resistance, and automatic reaction support lines, because they are very useful in telling the direction of the trend as we go onward. And then here, we want to go back and Ferrari, what else do we have here? Oh, Tata Motors. Okay, so this is another one, daily chart, and you can see here, look at this big gap up into a climax. The automatic reaction sort of comes in a long, slow grind downward. Here's the ultimate low, and then a rally up into an upthrust. And now it's back down into the area of support. It's trying to make higher lows. It's trying to hold this moving average here, which is a 200-day. And if it can get above the 50, possibly a much better rally could occur. But this has some distributional qualities to it. And so with this stock, I ask you to go explore these themes, look for trends, find the individual stocks that are acting the best and the worst. And just remember that the trend truly is our friend. We love trends. And I really appreciate you coming and spending some time with me today. We'll see you next time.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.